Hey, my name is Spot and I have been involved in trading for quite a while to share my knowledge with someone else. That's why I created my YouTube channel. Today, I will introduce you to the head and shoulders pattern, as well as the inverse head and shoulders formation are two of the most popular trading formations. Although they are not so easy to identify, they are very reliable and effective patterns that offer extremely lucrative risk-reward opportunities. I hope that when you finish watching this video, you will immediately start practicing what you learned today. So, let's dive in. In this video, I will show you the structure of the head and shoulders and inverse head and shoulders patterns, how to correctly draw them on the chart, as well as their most effective use case. Moreover, I will be sharing tips on how to trade and make profit by trading the head and shoulders and inverse head and shoulders formations. So, the head and shoulders patterns is arguably the most popular reversal pattern among traders. It's called head and shoulders formations because it resembles a baseline with the three peaks, with the center peak being the highest out of the three. As such, the three tops look like a left shoulder, head, and right shoulder. Both the traditional formation head and shoulders and the inverse head and shoulders formations are reversal patterns. Both consist of three mandatory elements. So, head. This is the highest in traditional formation or the lowest at the inverse version peak of the formation. So, in both versions, the head should be at higher or lower level compared to the two peaks on each of the sides. Shoulders. Two top sittings on both sides of the center peak are called left and right shoulders. Ideally, they should be symmetrical at the same or near the same price level. As these are extremely difficult to identify, asymmetrical shoulders are also widely accepted, as long as the distance in two peaks is not huge. And neckline. A straight line that connects the bottoms of the two shoulders is called a neckline. It's arguably the most important feature of the patterns as its break activates the pattern. The key difference between the traditional version and the inverse formation is that they occur at the opposite sides of the chart. A head and shoulders pattern is a bearish reversal pattern which signals that the uptrend has peaked and the reversal has started at a series of the highest high. The first and second peak is broken with the third peak, which is lower than the second. After the creation of a first peak, the left shoulder, the price action rebounds modestly before concurring lower to create a lower low that has. The price then again rebounds to a level similar to where the first rebound was finished, creating a base for neckline to be drawn. So what follows is another pullback to create a third low on the right shoulder before the price action finally burns higher, breaking the neckline resistance and activating the inverse head and shoulders pattern. Unlike some other chart patterns, trading the success of the head and shoulders formation rests very much on how well you draw the initial pattern. As outlined early, this pattern offers a set of predefined levels as you're actually trading against the neckline. Thus, drawing the pattern and defining the three key elements is a crucial part of the inter-trading process. The daily chart of USD and CADs shows a head and shoulders pattern that helps reverse the direction of a trend. The price action pushes higher, creating the consecutive peaks with a high and right shoulder slightly lower than the left shoulder. Still, there are two clear peaks on each side of the center peak, with a slightly ascending trend line connecting two shoulders. You can see that we started in an aggressive uptrend and finished the pattern in a downtrend, with the burst ultimately erasing more than half of the early gains. A similar situation occurs with the inverse head and shoulders pattern lower. This is a daily chart where the sellers are pressing the price low, creating a series of the lows. The head is represented by a series of similar lows, while the two shoulders are sitting off each other side of the head. Although the head usually consists of a single peak or low. We can also have rounded lows or peaks as long as there are shoulders visible on each side of the head. A break of the neckline activates the pattern. Before the neckline is broken, we consider the pattern to still be in the making. A neckline defines the stop loss after the breakout. Any reverse move to each other side of neckline activities the stop loss and automatically in what it is that pattern. A distance between the neckline and the head is measured to calculate the take profit. So let's analyze our currency ratio in real time. The currency pair we are focusing on the Australian dollar against the francs. Let's navigate to the corresponding market, Australian dollar and francs. We will opt for a short trade with a duration of 4 minutes and stake of $300. While our trend is in progress, let's delve in the reason behind our entry point. If we draw a support line where the chart bounced off and consider this initial impulse. Now let's switch to other tool. Initially there was an impulse followed by retracement, then a second impulse followed by another retracement, and the third impulse mirrors the first one. So this pattern of movement aligns with our currency trajectory. We can clearly and deftly on shoulder, head, and the second shoulder. All of them converge at the same point. This creates a trend line that's multiply touch points confirm. The left shoulder breaks through the trend line and moves downwards. We anticipate a similar movement to what we observed here. Furthermore, this setup is highly favorable for us and is likely to materialize. I'm 98% confident because we also have a resistance level to which the price is currently hitting. Hence, all that remains is to wait on the conclusion of our trade, so which will occur in 2 minutes and 30 seconds. And we are just 4 seconds away from the trade closure. As we can observe, the situation is unfolding flawlessly. We have generated a profit of $252, so let's review our market movements. As depicted, we have nearly reached the levels we plotted, indicating a high level of accuracy. So as you can observe, this pattern has proven to be effective in the past and will likely continue to be so in the future. Thank you for your attention, and I'm delighted that you watched this video this far and you enjoyed it. So I kindly request you to show your support by liking it. Additionally, I encourage you to subscribe to both my YouTube channel and my Telegram channel to stay updated with my content. By joining my community, we can foster friendship and engage in further discussions. I appreciate your support so much. Bye.